Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, April the 30th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal. I'm here to teach you guys some different strategies you can then implement into your portfolios, but please do that in your own way. Also remember, past performance of any trading system or methodology is not necessarily indicative of future results. Having that out of the way, let's get it on with some economic data. Across the pond, all we got was Spanish flash GDP coming in at 0.7%, higher than the expected 0.6%, but then they lowered last month's number down by that 0.1% from 0.7 to 0.6. So pretty much a wash on that headline number. Also flash CPI, Consumer Price Index, year over year came in at 1.5% out of the Spanish region. That's pretty much it for across the pond for anything major other than, actually we got preliminary flash GDP out of the European region, quarter over quarter coming in at 0.4%, expected to be 0.3%. Now over here to the United States, one of the things that got the markets kind of spinning around this morning was Chicago PMI coming in at 52.6. That's a miss. It was supposed to come in at 59.1. Getting below that 50 threshold. Remember, PMI Purchasing Managers Index is an index where the manufacturing purchasing manager gives his outlook on the economic picture. So these are really important. These are forward guidance, right? Because these guys see the demand immediately. They see it before anybody else, and they determine their output going forward on that kind of demand. So it's a very forward-looking number. Also, anything above 50 is expansion. Anything below 50 is contraction. We are just hovering above 50 on this number, so that was a little bit of a moment where the market started coming off a little bit. And then we got our consumer confidence, CB consumer confidence, which isn't a major number, but it does give the overall strength of the economy through the consumer's eyes and how they think the economy is doing. It came out better, 129.2, expect to be 126. And then we got pending home sales knocking it out of the park at 3.8%, expected to be 1.1%. No revision to last month's number, which was pretty dismal. Remember, it came in negative 0.1. So this is a good economic data point. It's caused the overall equities to kind of hold off on some of their sale off because, that PMI number was a little bit touch and go earlier this morning. We got onto the overall markets. We've got crude oil right now unchanged on the day. For the most part, we're trading right around that $63.50. That's unchanged from yesterday. Remember, we talked about this line in the sand being pretty important because it was where the bulls and bears were going to kind of fight over that 63.08, which lined up with the 23 Fibonacci there. So a settlement back above that gave the bulls a little bit more life. As you can see, this is the line I'm talking about. We had that settlement on Friday below that number. Yesterday, we were able to claw back some of that and get above that 23 Fibonacci area. So the market has had a little bit of a rollover here. We've kind of come off, but one would expect that after this kind of move where you get, it might even be the 5 point where you get the 5 waves with the correction of ABC where you kind of go like that, back down. So I'm thinking what we're getting here is this little bit of a bounce before we start coming back down to this little area here. So I think that oil is still overpriced. I think we need to come back down. Charts setting up like we are ready to roll back over again. All right, gold. Gold was trying to claw back some of yesterday's losses on the economic, that PMI number that we got that came out before the home sales. So the number that came out with that PMI really caused the overall markets to kind of fall over. Then we got that pending home sales, which really knocking it out of the park, is giving us a bit of a rebound. Gold trying to discern which direction the equities want to go because it is more of a flight to safety. The fact of the matter is it's lined up right here with the point of control, and that is a magnet to draw this. So we could easily see gold staying above this 1280 area, which lines up with the 61 Fibonacci. That could act as a major support. You can see it's done it before right there a couple of times today. I think that it will hold, and the market's going to want to push back closer to that point of control. And then we've got the bonds. They're starting to move higher as well. You know, a lot of people talking about that the bonds need to go higher because the economic picture is looking like we are not going to raise interest rates, but they're starting to lean towards cutting interest rates. Remember, we're not seeing any inflation anywhere. The economy is kind of sputtering along. I think it's doing well, but it's just not on all 8 cylinders, let's say. So the market is trying to trudge higher. That being said, a lot of talk yesterday about the Fed needs to lower interest rates and get us back to an area where we can start churning again. So a lot of talk about that. Remember, we talked about this. If interest rates go down, if they lower interest rates, then bond prices have to go up. So it's the teeter-totter. And this is the idea, is you have the little teeter-totter, and as interest rates push down, then the bond prices go up. Easy way to remember how that lever and pulley works in the bond. So right now, we are pricing in lower rates. All right, we've got the VIX spiking back into the teens. That's a good thing for option premium, right? We like to see those higher volatility numbers so that we can start trading some options on the short end. That gives us more wiggle room to the outside. I don't know if it's the right time right now, but we can see that volatility is starting to creep back into this market, and it will give us an opportunity to start selling premiums going forward. Right now, we can see the Dow Jones Industrial Average off on the day by about 105 points, near the lows as well. NASDAQ on the lows of the day, down almost 60 points. A lot of this is having to do with Google coming out with pretty bad earnings. Then we've got the E-mini S&Ps. This looks like a very serious topping pattern right here. We got the rally up this top with that doji right there. Even if it was a red doji, green doji, it doesn't really matter. But when you get one of those kinds of moves to the upside, I gotta remember to pull this thing out a little bit better. Anyway, so we've got this type of doji now at the top of a move where we had that, right? Anytime you get that settlement where you see the bar, especially this is like a perfectly typical kind of setup, something like that is very bearish, and that's what we are seeing right now. If this market were to change around and then we had something like a pattern like this, where we have right now, this market has sold off quite dramatically. So we could say that, you know, right now we're down at this level here, right? The market we're able to track back up to near the highs of the day, then we would have that pattern. That could very well be a continuation pattern. So we need to wait to the end of the day to figure out what this is all setting up for right now. Like I said, if we rallied all the way back up to like that point right there, it would kind of start looking like that continuation pattern. So that's something to keep an eye out for today in the equities. A setup like that would not make the market look like it's rolling over anymore. And then we can go on to the E-mini S&Ps on the daily chart. You can see this is what we were talking about with the economic picture. Pretty good. The PMI numbers really is the catalyst. Right here is where we got that housing number. Market really tried to come back on that, but the bears came out full force since then and have started selling off on this market. You can see down 17 points on the day and just a couple of ticks off the low. So the equity is starting to show a lot of weakness, and we've been talking about this. The economy has not been robust, and the Fed continued to raise interest rates throughout that to kind of cover their own assets. That was not a pun, but cover their own assets. And you can see what that's done to the overall economy. All right, Google. This is the trade that I put on for earnings, and it is a thorn in my side right now. So earnings have not been good to me so far with Google and Han. All the other ones have done out or come out pretty well, but like I said, we usually talk about the ones that hurt the most and are the ones that we have to put the most time and energy in, and that's these ones that aren't working out. Google being one of those. I have it in the May, so it's going to expire on Friday. Sold the 1,200 puts, sold the 1,200 puts. I was looking at this market where we've got this value area high in and around there. This 1200 area is a psychological level, so that's why I picked that strike with the extra dollar. I figured, you know, this psychological level, markets would kind of hold off here. You can see right down here, they were expecting about 10 something a share. They came out with 11, but the problem is this is adjusted, and it really is something like $9.90. So it was a miss on the headline number and on the earnings per share, really. But this revision, they snuck in there to try and get the person who's not paying attention to bite on that. Having said that, with those puts, I'm still holding on to those. I'm going to ride those out a little bit longer. We've got this huge drop right here in the market, and I'm hoping that we can at least come up and make this look like a doji, kind of like that would be perfect scenario, and then get the rebound tomorrow. But I'm going to hold off on this one right now and keep an eye on it. I was thinking about selling some more puts in here, or maybe even some calls, but I haven't added anything to this trade right now. I'm going to hold off, but I would like to try and get out of this trade because we've got a lot more earnings coming out, and I am pretty close to margin on all of my trades. So I'm going to have to do some wiggling and juking and jiving to get out of a couple of these bad trades that we've got going on right now. Nice little rebound would be great for Google, but with the overall equities kind of slumping right now, it could be a tough row to hoe at this point. All right, that's all I've got for you guys today. Stick around. I'm going to be talking about other earnings in Twitter, so follow me at Wolfman's blog. Comment at the bottom of this video. Tell me you like or dislike, what you guys want to talk about, what you want to see. All of those things help us tailor all of this so it's bespoke to you. All right, that's it. That's all I got, other than if you can't take that, whoop, take it easy.